before the crisis, the regulators around the world had made some efforts to tighten up regulation of the financial services industry, and yet the banks did find themselves in a lot of trouble. How do you think this could be avoided in future?
I think it's important to look at the drift of regulation before the financial crisis and the credit problems. And from Basel II onwards, there was a lot of attention given to how banks shouldn't see regulation just as a reporting mechanism, but should look at it as a best practice for how they actually run their institutions. I think one of the lessons you could learn from the years leading up to 2008 is that banks largely paid lip service to that, but didn't really change how they directed themselves and how they measured that direction internally. So I think you're absolutely right that banks have lost a lot of trust generally with both retail and corporate customers. The key to rebuilding it is probably to do with transparency. If customers can see how their bank is operating, why they're offering them products, why they're charging in a certain way, and why they take certain actions during the product life cycle, that probably goes a long way towards trust. But I think it's not an immediate benefit that banks can get. I think transparency and trustworthiness needs to be shown over a period of years. But if the banks start now at the bottom of the stairs walking up towards revealing more of their decision-making processes and reasons to their customers, then I think they're probably well set to achieve that again.
Do you think that this recovery is sustainable, and what can banks do to make sure that they are among those that are kind of recovering and thriving?
So I think you're right again that the banking sector does indeed appear to be recovering in general. I think the risk is that banks consider that they can go back to the world as it was before 2008, and in order to avoid that I think banks need to look again in a very long-term strategic way at what they think their business is, what size they want to be, how they want to run themselves, and how they're going to respond to future commercial and regulatory pressures, which basically means they have to take a longer-term view of their business, which if you wanted to put it in a slightly snappier way, it's sort of a back to basics on banking. Banks should remember their banks and that banking is a long-term business. And I think that will be the key thing which distinguishes either a short-term recovery or a longer-term, more genuine recovery in the market.